All right, guys, so we're just going to jump right into this. There's a lot going on in the crypto sphere as far as the taxes go. If you don't know, I am a tax accountant. I am somebody who specializes in understanding what's going on in the crypto markets in regards to tax. So I hope I can provide some value to you in that regard. But there's a lot going on with this infrastructure bill, which is currently coming out, that of course we don't have any money to pay for, so they're going to bleed our crypto friends dry, or at least they're going to try to. And I think that they, as the government always does, are going to impose legislation that's going to make it ever more complicated to engage in the cryptocurrency sphere. And at some point, the overhead, I suspect, is going to become so top heavy that people are going to be forced into privacy coins. Monero, Darrow, PRCY coin, Pirate Chain, another favorite. And I'm wanting to document this for people so that people can see this is going to be the case, because not many people are awake to this as of yet, but they will be. They will be. Um, so Pirate Chain right here. Let's see how they're doing today. Pirate Chain's up. Darrow is having a fantastic day. Nero, which is kind of a joke coin based on Monero, is doing great. The cryptocurrency sphere in the private sector is doing well. A lot having to do with this news. So, crypto allies rally against ignorant new tax, quote unquote, in bipartisan infrastructure deal. And look, bipartisan, it's like the Republicans are total traitors. The Republicans are a bunch of Rhino Republicans, Republican in name only, which I'm not even sure if that designation makes much sense anymore, because, the government is the government. The people in charge are the people in charge. They meet behind closed doors. They have parties with each other. It's bipartisan. They're all part of the same echelonic group, right? So opponents say reporting requirements could be impossible for some companies to meet. And we talked a little bit about this yesterday. I made a video about privacy coins spiking in response to this news. But it would require businesses to report digital asset transactions for more than $10,000. And the bill would require any person who regularly provides a service that executes transfers of digital assets to report those transactions to the IRS, like securities brokers must do for stock and bond trades today. So you're talking about more regulatory oversight and more of a regulatory cumbersome burden, which is going to make it so that, hey, why would I transact in these coins, which are treated as property by the IRS, if I can use dollars, if I can use the digital currency, which I'm sure is coming, which is to be yet released by the central bank, if I could use gold and silver maybe under the table. Why would I use these public blockchains if I'm going to have to report capital gains taxes, if I'm going to have to report to the IRS these transactions on perhaps a daily basis? I mean, if you're a business that is transacting more than $10,000 every single day, which many corporations do, that's going to be a hell of a burden. And what would be the benefit of doing that, right? Because think of Gresham's Law. What is Gresham's Law? Gresham's Law is when the good money gets taken up by people. It doesn't really filter its way through circulation because people want to hold on to the good money, which in this case is presumably Bitcoin. They would rather spend US dollars. They'd rather spend fiat currency, which doesn't have these overheads applied to it, right? So you're going to have Gresham's Law kick in. People are not going to be wanting to adopt cryptocurrency when you have all of these cumbersome regulations being thrown on top of it. These requirements would enable the IRS to collect money already owed by law, but which often go untaxed because the government doesn't know about these transactions. Well, I'll tell you what transactions the government doesn't know about. They don't know about Pirate Chain. They don't know about Monero. They can't figure out anything about those transactions. Okay, they can about Bitcoin, though. They're employing firms like Chainalysis. We've talked about this before, where they're going to be employing artificial intelligence. They're going to be doing things in the forensic accounting world we call Bayesian reasoning, using Bayesian networks to figure out who it is owns which wallets, how much money they have, And if they come out with wealth taxes, which we've already seen Elizabeth Warren talking about, you are going to have an issue, right? I mean, you better hope those Monero atomic swaps are ready to go at that point, because nobody's going to want to stay in these cryptocurrencies, especially if you have a significant sum. They know where it is. They're going to come after you and go get it, right? Crypto has been around since 2008. For over 10 years, the space has had zero regulatory clarity, but it took the Senate all of a few days to use crypto taxes as pay-fors for a bloated infrastructure deal, which I think is ending up to be like 2,500 pages or something like that. I'm sure they've all read it. I'm sure they all know what's going on in there. The executive director called the bill hastily drafted and argued in a statement that while improvements to our nation's infrastructure are important, the provision, it's not about infrastructure. It's not about infrastructure. The provision would subject companies like those who manufacture hardware for storing digital assets to IRS reporting requirements they may not be able to comply with because they don't have any visibility into their customers' transactions. Well, you're going to have to ask your customers for that information. And I suspect this is going to be coming, where if you transact with a person for any digital asset, you're going to have to report information about that person. You're going to have to report who they are. You're going to have to report what the transaction was for. And if you don't do that, then you will be out of compliance. You'll be acting in an illegal manner. And if both parties are subject to the same requirements, then you kind of have like this game theory thing kick in, where you're suspecting one party may report, and so that's going to incentivize you to report. And if one party is reporting for another party, you know, the other party has to report as well. And they get into the habit of reporting. And so if you transact with those people, you're going to be incentivized to report. And so then it's just going to turn into this Soviet thing where everyone's reporting each other's transactions. Now, could the same thing happen with Monero and Pirate Chain? It could, but by default, they can't glean that information. If they use Chainalysis, there's a possibility, a higher potential possibility, that they could figure out what's going on in those transactions without you reporting it. And if you don't report it and they figure out you're not reporting it, then you could be in trouble. Whereas they can't figure that out if you're using Monero, Pirate Chain, or some of these other privacy coins. Instead of rushing through an untested provision with vast unintended consequences, we encourage Congress to work with the industry to find language that works for all stakeholders, keeping America at the forefront of crypto innovation. Okay. So that's happening. Cracking up how reading how some cryptocurrency folks are upset about having to report transactions of 10K or more to the IRS. It's almost like tax dodging was part of their plan. Duh. This will be relatively easily evaded, and so far, more should be done for tax compliance. And this guy's a total cuck wearing a mask. I mean, there's no surprise about that. But that's what's coming. Okay. Yeah. So cryptocurrencies were trading lower on the news. Privacy coins were not trading lower on the news. And I suspect as the atomic swaps get geared up, which they've already figured out for Monero. If you don't know what atomic swaps are, basically you are able to peer-to-peer privately transact your public blockchain cryptocurrencies, Bitcoin, Ethereum, whatever, for Monero without having to go through an exchange, without having to do any of this know your customer stuff. It's all private, it's all decentralized, and you're able to get out of these public blockchains. Now the question is, once this stuff really starts to gear up, how much liquidity are you going to have in the Monero atomic swap market for people to get out of Monero into Bitcoin? I don't think many. So I do suspect at some point, and Jeff Berwick says the same thing, there's going to be a rush to the exits with this stuff to get into private digital currencies. How the IRS is trying to nail crypto tax dodgers. Let me just make sure I'm still recording. Okay. The IRS treats virtual currencies like Bitcoin as property. We talked about this. The agency recently ramped up efforts to subpoena centralized crypto exchanges for information about non-compliant U.S. taxpayers. Yes, and this is coming. And Binance actually just recently made it so that you could only withdraw, I think, 0.06 Bitcoin per day. I mean, if you've got a lot of crypto on Binance, that's going to take you a while to get out of. And while they're ramping this stuff up, that's going to make you a little bit nervous, right? Because if your whole thing was, well, first off, nobody even knows about taxes in the cryptocurrency sphere in many cases. I mean, you have a lot of these kids who are just trading cryptocurrencies. A lot of them aren't even like 15 years old yet, and they're just making all of this dough trading what they like deem to be pretty much trading cards online. It's like they don't understand the enormity of the tax implications that they're getting themselves into. But the government will find out, right, as compliance kicks up. A raft of new crypto reporting requirements. But now, those crypto wallets are getting a whole lot of attention from Internal Revenue Service and President Joe Biden, who appear determined to crack down on tax cheats. The timing makes sense. The president needs to raise money relatively quickly for his own ambitious economic agenda, and the tax gap, which is the difference between taxes paid and taxes owed, is a big pool of cash ripe for picking. The country is losing about $1 trillion every year in unpaid taxes. No, the country is losing money because you guys can't stop freaking spending it. That's why the country is losing money. It's not because you guys aren't stealing enough money from people. It's because you spend too much of other people's money that you don't have. We're running deficits of $3 trillion, $4 trillion every year. The trade deficit is going to be over $1 trillion. So we're going to have twin deficits, budget deficits and trade deficits, well over $1 trillion each. You guys don't spend enough every year. You ramp it up again and again and again, and we can't afford these things, right? We don't make anything. Most of the taxes that are paid in this country are just because of financial chicanery from the financial sector that they tax from capital gains. It's nonsense. Our country is nonsense. IRS Chief Rettig should be ashamed. And he credits this growing tax gap to the rise of the crypto market. Yeah, it's the crypto market. Totally. Just dudes trading virtual currency on the internet. That's why the government's broke. The federal government is so convinced of the potential for income from back due taxes that the White House wants to give the IRS an extra $80 billion and new powers to crack down on tax dodgers, including those parking their cash in crypto. Now, this is so key, guys. You guys have to understand this. In my opinion, the government cares more about power than they do about money. Now, power and money, you could make some synonymous connections there. If they don't have money, how much power do they really have? Good point. But when it comes to cracking down on their political enemies, of which a lot of people in the crypto market are their political enemies, and their economic enemies. I mean, if they come out the U.S. CBDC, the central bank digital currency, U.S. coin, Americoin, whatever they're going to call it, their cryptocurrency, which they can just inflate to no end instantaneously just by pressing the 0 and enter button on their computer and just sending it out into the markets. I mean, again, they were talking about just sending people money from the Fed, straight from the Fed, put it in their bank accounts. Just crazy stuff going on. If people are using Bitcoin and some of these other digital currencies, the IRS is going to crack down on there. The government's going to crack down on there. Just look at what China did. China reins in Bitcoin cryptocurrencies to push digital yuan. And there are other private payment networks in the country. Tencent and Ant Group spent a decade digitizing money and payment networks. Now the government wants a larger role, which means they're going to crack down. Because they want power. They want control. So $80 billion, that's a lot for the IRS. And they're going to employ that money to come after you. And it's not just going to be, oh, you're hiding money from us. It's going to be, oh, you're an anarchist libertarian. You're somebody who likes free markets. You're like somebody who doesn't think everybody should be mandated to have some poison concocted in a laboratory injected into you. we're going to take you to jail, right? Because you're evading taxes with cryptocurrency. And we saw this yesterday with the Israeli article we went over. People who transact in Bitcoin and some of these other public blockchains, they are being deemed potential criminals. They're being put on a list. Crazy stuff. The IRS is in the business of collecting revenue. Yes. Historically, if they spend $1 for any type of enforcement activity, they make 5. They steal 5. That's what you mean. I think crypto enforcement activities are even higher than that. It's probably true. It's probably true. In the U.S., it's very easy to be an unintentional crypto tax cheat. Now, this is totally true. This is totally true. I mean, how many people do you know who are under 18 years old who understand nothing about the world of taxation, the world of reporting things to the government? These are people who are just on Robinhood or on Webull buying Dogecoin. Some of them are making millions of dollars. It's crazy, but they're not thinking to themselves, oh, well, I've got to make estimated payments because I'm not withholding any of this money. And if I'm not withholding any of this money, then if I don't make my estimated payments, then they're going to penalize me for the amount that I don't withhold, which actually is the case. You could even pay all of your taxes come April 15th that you owed in the year prior. But if you didn't make estimated tax payments, which accounted for 90% of all the money that you were supposed to withhold at the end of the year, as a sole proprietor, you were going to have to pay penalty on that which you didn't withhold. A lot of people don't know this. I would say the majority of the people involved in the crypto market don't know this. And so as they figure out who you are, which wallet is yours, what transactions you've been involved with, what you haven't been reporting, people are going to freak out. People are going to freak out. And people are going to rush into private digital currencies. Tax year 2019 was the first time the IRS explicitly asked taxpayers whether they had dealt in crypto. Now, we went over this yesterday. There's a box that you have to check if you're receiving, selling, sending, or exchanging cryptocurrency. But experts said the question was vague and crucially, I mean, I don't see what's vague about that. If you are involved in cryptocurrency, you got to check a box. The IRS upped its game by moving the virtual currency question to the 1040 itself, which is used by all individuals filing an annual income tax return. Yes. Many filers have no clue how to calculate their crypto capital gains, taxes, and losses. So, or gains and losses. So, if you're out there and you need somebody to consult you on your crypto gains and losses, because remember, you can take up to $3,000 in capital gains losses. Please use these capital gains losses, or these capital losses, because they can lower your tax. Please, 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 up to $3,000. If you lose up to $3,000 this year on cryptocurrency, you can report that and you can reduce your tax liability. Very important. And you have to report your capital gains. Now, you can go through Coinbase, you can go through Binance. I think that they have tax services which show you your cost basis and how much gain you have from each transaction. Now, I think it's up to you to determine whether or not you're using FIFO or LIFO, which are different ways of figuring out your gains on things. FIFO is first in, first out. LIFO is last in, first out. You could also use an average weighted basket, but it's up to you to calculate and figure out what works best for you, your gains and losses on your trades. That doesn't happen in the crypto world. Many crypto exchanges don't report any information to the IRS. I wonder if Trade Ogre is reporting information to the IRS. I don't think so. Some crypto exchanges have begun to issue a tax form known as the 1099-K, which is traditionally given to individuals who engage in at least 200 transactions worth an aggregate of $20,000 or more. In the context of crypto, this form only reports the total value of transactions. Right, and people are not going to calculate their gains and losses, honestly, on this stuff in many cases. Especially if you have hundreds of trades, you're actually going to... It's like, oh, what was the dollar amount of my Aave or my Ethereum when I bought this, and what was the dollar amount when I transacted it for this other obscure cryptocurrency, Vlad coin or whatever. Nobody's writing this stuff down. Nobody's going to look into this stuff, right? The total value does not factor in to how much a person paid for the cryptocurrency in the first place, something referred to as the cost basis, which makes it hard to calculate the taxable gain. Correct. So people are going to have to go back in time, and they're going to have to try to figure out what their cryptos were worth at that particular time in dollars. The work involved in that, just many people aren't going to do. A lot of people have actually overreported their income because they got confused. Or you just used a calculation method which was not optimal for you. Like if you use first in, first out, if the crypto, like let's give an example, right? So when you first buy Bitcoin, you start buying in 2017 when it's worth like $2,000. Okay. Well, if you start to sell in 2020 when it's worth $50,000, but let's say maybe you started to buy a little bit in 2020 when it was maybe $35,000, $40,000, you would rather use last in, first out rather than first in, first out, because if you use first in, first out, your gains on those Bitcoins that you first bought are going to be significantly more than the gains on the latter coins. And this is assuming that you want to lower your tax liability for the year. And, if Bitcoin goes up even further, at some point you're going to get to those coins that you purchased in 2017. You're going to have to, pay the extra gain on that. But you can use strategy to lower your reported gains. And again, people just aren't going to look into this stuff for the most part. But the biggest issue driving non-compliance is the fact that the tax rules surrounding digital currencies are still being worked out in a state of constant flux, which confuses people and makes them want to go into privacy coins because, I'm not going to deal with that. They can come out with stuff which makes it impossible to comply with the law. And we know the IRS has been weaponized against conservatives. That is a historical fact which happened during the Obama regime. And if you are on the wrong side of the IRS and they're making all of these obscure, vague proposals and laws, do you want your money sitting on the blockchain for them to see? Just doesn't make sense to me. Just doesn't make sense to me when they can just come up with some excuse to say, hey, you didn't comply with this or that. Sorry. You are going to go to court, go to jail, wherever it is they want you to go. If you buy one Bitcoin for $10,000 and sell it for $50,000, you face $40,000 in taxable gains. While this concept is relatively simple, it isn't always clear what constitutes a taxable event. Is buying Dogecoin with your Bitcoin a taxable event? Yes. Is purchasing a TV with your Dogecoin a taxable event? Yes. Is buying an NFT with Ether? Yes. Okay, so they say all above are technically taxable events. Correct. But people, again, don't understand this because when they think of currency, because they're called cryptocurrencies, they're thinking of, a medium of exchange. And typically with a medium of exchange, you don't have to worry about, paying taxes, for instance, on the value of your dollars. It's not like you're doing FX exchanges in the markets. You don't think that you have to pay tax. You don't think that that's a taxable event. You don't think that you're trading one form of property for another. Right? And so people just don't think these are taxable events when indeed they are. Mining Dogecoin for fun qualifies as self-employment income in the eyes of the government. So if you're mining cryptocurrency, you must report the value of the cryptocurrency that you receive when you receive it in dollar terms. Are people doing this? Are people waiting around seeing what the dollar value is every time that they receive a little bit of cryptocurrency from their mining rigs? I don't think so. According to cryptocurrency tax software Taxbit, which recently contracted with the IRS to aid the agency in digital currency-related audits, go to hell, Taxbit. Tax rates vary between 10 to 37% on mining proceeds. Right, and I haven't even heard of Taxbit before, but that's just another firm that the IRS is using to figure out who's doing what on these public blockchains. And they're going to come after your money. And it could be that a lot of these people, They think, oh, I'm a crypto millionaire. Awesome. I'm going to sell all my cryptos and I'm going to buy a new house and I'm going to, live like Dan Bilzerian for a few months and like rock out. And then the IRS comes after them when they're completely out of money, like Dan Bilzerian after a few months. And then you're going to go to jail because you can't afford the taxes. And this is going to happen with so many people. Oh man, it's such a trap. It's such a trap. The crypto miners have to pay taxes on the fair market value of the mined coins at the time of receipt. Correct. This information is so critical. It's so critical. This has to get out there. And you could treat it as a business. You can deduct equipment and electricity expenses. People like me are going to make a lot of money from all this. Again, I'm a tax accountant. If you need somebody to work all this stuff out with you, please get in contact with me. I would love to help you out. Earning interest on the Bitcoin sitting idle in your crypto wallet also counts as income. So if you have, Cardano, Algorand, every time you earn interest on these public blockchains, you have to pay tax on those. Figure out the dollar value of when it is you receive that interest, and a lot of these places where you store your cryptos in order to receive periodic interest, it's not going to record when you receive the interest in many cases. So that's going to make it even more hard to comply with this stuff. Although I don't know how people are earning interest on the Bitcoin. Bitcoin doesn't give you interest. It's a proof of work coin. I don't think they know what they're talking about. You can loan it out and you can make money, but you can't. It's not a proof of stake coin. You can't do that. Crypto trading volume may have fallen off a cliff in the last few weeks, but overall the market value of digital currencies is still up about 75% this year. The IRS has made it clear it wants a piece of the action. And there's subpoenaing exchanges. Here we go. Okay, courts authorize the IRS to issue John Doe summons to crypto exchange operators Kraken and Circle as a way to find individuals who conducted at least $20,000 of transactions in cryptocurrency from 2016 to 2020. From 2016 to 2020. Wow. And they did the same thing to Coinbase. Could you imagine how many people are going to get caught up in this net? So many people. And these people are going to have legal fees. They're going to have court costs. And just think of how many of these people made a lot of money because, you have taxable transactions going on all the time when you're trading on these platforms. Maybe you bet it all on Dogecoin right before it crashes. Okay, you still have to pay those taxes on all those gains that you had before you got to that crash. Okay? All those are taxable transactions, and you have to pay tax on those, even if you lose all your money in cryptocurrency. And you can only report $3,000 of capital gains losses. So if you've had more than $3,000 of capital gains losses, and you had $50,000 in capital gains, it doesn't matter if you lose it all. You can only take $3,000 off, but you're going to have to report and pay taxes on the $50,000 of gains. So if you lost a lot of money in crypto, after you had made a lot of money in crypto, you are going to be in trouble, right? Issuing these summons one exchange at a time is a clumsy way to capture non-compliant U.S. taxpayers, but can be effective. In 2019, the IRS announced it was sending letters to more than 10,000 people who potentially failed to report crypto income. The infamous letter 6173, Execute Order 66, gave individuals 30 days to respond to the IRS. Otherwise, they risked having their tax profile examined, which means they'll probably look for other things that you were doing out of league with the IRS. Letters went out again in 2020, and they're going to come out every year, and they're going to produce more and more and more of these letters as they subpoena these exchanges and as they figure out who's on the public blockchain, who owns what. Dude, people are not aware of this. People don't see this happening. The agency's partnership with Taxbit is a part of this effort. Oh Lord. The software is described as being able to go through cryptocurrency wallets and analyze them and figure out what was bought and sold in crypto. In addition to enlisting the services of the vendor itself, the IRS agents are being trained up on the software as a way to identify tax dodgers. They're coming after you guys. Are you guys sure you still want to be in these cryptocurrencies? And as we talked about yesterday, if they were to drop a Nagasaki and boom on the crypto market, if they wanted to nuke the crypto market, they would just come out with unrealized capital gains taxes. They would just make it so that even if you don't sell your crypto, if you just have the crypto and it's appreciated in value, they're going to make you pay taxes on that. And people are like, no, that's not going to happen. Are you sure? Are you sure? I mean, they're already singling out people in Israel for engaging in up to $61,000 of cryptocurrency transactions, or if you just have more than $61,000 of crypto in your wallets, they want you to report to the government. And they're going to put you on a list, and like, it's crazy stuff. The president's 2022 budget proposal could lead to a raft of new crypto reporting requirements for those dealing in digital coins. They call for more comprehensive reporting requirements. Okay. Yeah, and this is crazy. This is crazy. They're changing the long-term capital gains tax on crypto, stocks, bonds, and property in general, right? So it used to be that the capital gains tax was differentiated between long-term and short-term. So if you had assets held for less than a year and you sold it, then they consider that to be a short-term capital gain, in which case your gain is taxed as ordinary income. And based on how much income you had during the year, in the top tax bracket, you were taxed at 39%, going all the way down to 18 to 22%, based on how much your income was. Now they want to raise the top tax rate on long-term capital gains up to the top tax rate of ordinary income. And the top tax rate on long-term capital gains used to be 20%. Now, the 3.8% here includes the net investment income tax. But they want to double the long-term capital gains tax. And if you are one of these people who made a lot of money from cryptocurrency, who has a lot of money in Bitcoin, they want half of it if you sell it. And you're going to be incentivized to sell it because if this stuff passes, or there's a concern that it will pass, and I think that it's going to be retroactive so that you can't get out early to try to avoid the tax and pay the lower tax. But there's, I think, probably going to be selling pressure anyway. And if you're concerned about that selling pressure, you may sell. It's very bearish for the market, very bearish. Crypto gains are being taxed as any other type of gain in assets. Okay, I think we've been through a lot of this stuff. And this is my message to you guys. They have the same thing. Why did this just pop up? Lesperance warned that taxpayers need to move fast. Yeah, you need to move fast into privacy coins. You need to get into Monero and Pirate Chain as soon as you possibly can. By exercising a properly executed expatriation strategy, the first... All right, I don't know what they're talking about here. The runway to execute the strategy is very short. Yeah, you need to get into you need to get into privacy coins, man. They are coming for you guys. They are coming for you guys. All right, we're still recording. See, I have this weird thing on my computer where like my sound bar just randomly pops up, and Is my mic still working? Yeah, my mic's still working. That's fine. But like sometimes my sound bar just randomly pops up, and I don't know what to do about it. We'll just try to ignore it for now. I'm sorry about it. But yeah, we're talking more about the IRS here. New legislation proposed by Elizabeth Warren, now this is back in May, still relevant, would supercharge the IRS's ability to catch wealthy tax cheats, as well as do more to focus on racial and income inequalities in the IRS enforcement processes, which means they're going after the rich white guy. So the IRS, I'm just showing you this article, is going to be weaponized against a lot of the people who have a lot of crypto, which isn't just Europeans. I don't even know if you can say white people anymore on YouTube, but against Europeans and the wealthy. So just more stuff going on. This is talking about the increase in the tax rates going on under Biden. Because again, they can't take enough money from you. Look at that. We would skyrocket to the top. We would become totally a socialist nation. Which we are already. We're a socialist, fascist, communist, technocratic, totalitarian dystopia, and it's going to get worse by the day. But I wanted to discuss these things because it's becoming ever more obvious that they're coming after the crypto market. And if you are on the wrong side of the government, they are going to want to punish you using the IRS. And just look at all these things that they're doing, guys. You don't think that they would come after you using the IRS, using the transactions which are on the public blockchain for them to see? So we could talk more about this. I got to go. But again, privacy coins, Darrow, which is the private form of Ethereum, Monero, private form of Bitcoin, faster, I think, than Bitcoin even, and lower transaction costs. There are many great things about Monero. You can mine it on your own computer. You don't need one of these mining rigs. You can just mine it on your own computer. It's very decentralized. Pirate Chain, it's another one in the works. Market cap is only $500 million. It's a joke. Monero's market cap is $4 billion. The market cap of Bitcoin is like $750 billion. Like, the room to run is huge. So I'd look into this stuff before it's too late. There's a lot of great stuff going on in that sector as far as developments are concerned. I think Monero is coming out with a decentralized, privatized exchange where everything is private and everything is decentralized. There's no know your customer stuff. There's no subpoenas that are going to be sent anywhere, because it's just going to be a DEX, a hub, where the main base in the pairs which are used instead of Bitcoin is going to be Monero. And Monero is a private currency, and so you're going to be able to get a bunch of different cryptocurrencies without anybody really knowing it. Now, I'm not saying that don't report your taxes. I'm not saying do anything illegal, obviously. I'm a tax accountant, so I can't advise on this. But the pressure for people to get into these things is going to be immense. So I'd recommend checking it out. Go to Trade Ogre. That's where you can see a lot of private cryptocurrencies. Good stuff going on there. And again, guys, my name is Mateo Matt. Follow me on Gab. I'm called Gulag Stag over there. Thought it was catchy when I made it. I am a tax accountant. Again, I do bookkeeping, I do payroll, and so if you need help with any of that stuff, or if you just want to talk to me about crypto and taxes, and you need some advice on that, please feel free to get into contact. So you guys have a wonderful day, and I hope that it's a wonderful weekend for you.